Today, Bitcoin stabilizes following a volatile morning as new economic data shows inflation is cooling. Former Alameda top lieutenant Caroline Ellison gets her sentencing date in federal court. And Chainlink's Sergey Nazarov breaks down how last night's presidential debate performances could be impacting crypto prices. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies stabilizing this afternoon as new economic data out this morning revealed that inflation slowed last month and following last night's combative presidential debate between Republican candidate Donald Trump and Vice President Kamala Harris. Now, as of noon Eastern, Bitcoin traded pretty flat at nearly $56,700 after dropping to the $55,000 level the hour before. Ether also was flat compared to 24 hours earlier. Solana, however, fell more than 2%. Now, the former president recently positioned himself as a pro-crypto candidate whose return to office could mark a win for the crypto industry that has accused the current administration of regulatory overreach. Now, while Trump has publicly courted the crypto industry, speaking at Bitcoin 2024 in Nashville over the summer, promising friendlier regulation, Harris has yet to detail a policy position on digital assets. Now, crypto wasn't mentioned in the debate last night, but as we told you earlier this week, a recent report from Bernstein forecasted that if Harris wins the election, Bitcoin could fall to as low as $30,000. Now, on the flip side, Bernstein predicts the cryptocurrency could hit new highs if Trump is elected president in November, reaching a price between $80,000 and $90,000 by the end of the year. Now, following the debate, pop superstar Taylor Swift posted on her Instagram account, which has more than 280 million followers, saying that she will vote for Harris in November. Now, citing online betting site PredictIt, Reuters reported that bets on a win for Harris improved to 56% from 53% before the debate, while Trump's chances dipped to 48% from 52%. Meantime, new data out this morning revealed CPI increased 0.2% in August, in line with Wall Street expectations. That put the 12-month inflation rate at 2.5%, which is the lowest that it's been since February of 2021. Okay, let's talk about the top stories. Another sentencing in the FTX case is around the corner. Caroline Ellison, former Alameda Research CEO, and ex-girlfriend of former FTX CEO Sam Bankman-Fried, is scheduled to have her sentencing hearing on September 24th, and her attorneys are arguing that she shouldn't get a prison sentence. In a filing submitted yesterday, her attorneys claim that Ellison poses no risk to reoffend and point to her, quote, early disclosure of the crimes, her unmitigated acceptance of responsibility for them, and most importantly, her extensive cooperation with the government. Now, in May, Ryan Salem, who was a former top lieutenant at FTX, was sentenced to 7.5 years, which was actually a heavier sentence than the 5 to 7 years suggested by prosecutors and the 18 months requested by his defense. Unlike Ellison, Salem did not take the stand during SBF's trial, but he had also pled guilty to charges against him. Now, he was initially trying to void his guilty plea, arguing that prosecutors reneged on a deal to end an investigation into his partner, the mother of his young child, but he walked back that request. Still, Judge Kaplan wants to hear about the since withdrawn filing to the court. Now, Salem, who's due to begin serving his sentence on October 13th, will be in court tomorrow, and I'll be there tracking the developments, so stay tuned for coverage. Next, a new report from Jefferies says crypto mining was significantly less profitable in August. The investment bank found that August's average daily revenue per exahash fell by 11.8% month over month. Now, that coincides with a 4.2% decrease in the average price of Bitcoin and a 2.7% increase in network hash rate. Jefferies also said that North American publicly traded miners mined a smaller share of new Bitcoin in August compared to July, down to 19.9% of the total network versus 20.2% a month ago. Now, that's in part, Jefferies says, to these miners bringing new equipment online faster than the network's hash rate increased. All told, the report found that mining economics are moving in the wrong direction, but that operational efficiency is improving. And when digging into specific miners, Jefferies pointed to Marathon Digital, saying that the company's new strategy of buying hosting providers that once managed its mining infrastructure is something that the investment bank supports. All right, for our main story, I spoke with Chainlink co-founder Sergey Nazarov about the impact of last night's debate on crypto prices, the role of digital assets in the upcoming presidential election, and how spot crypto ETFs have been going. So let's start off with markets, because this morning crypto prices fell, with Bitcoin dropping to the $55,000 level as of around 11 Eastern after last night's presidential debate where Vice President Kamala Harris put her Republican rival Donald Trump on the defensive. Now, Bernstein came out with this report forecasting that Bitcoin could hit new highs if Trump is elected in November. But following last night's debate, some betting sites are now showing higher odds of a win for Harris compared to before the event. Now, the Democratic presidential candidate has yet to, take a public stance on crypto, even though we've reported on conversations happening behind closed door between the VP's team and industry leaders. My question to you, Sergey, do you think that yesterday's debate performance is factoring into today's prices? And what do you think will happen to crypto more broadly, the market more broadly, if one presidential candidate wins over the other in November?
Yeah, I think it's very hard to understand and predict what moves crypto prices in the short term. I think people have all kinds of, short-term theories. In my view, crypto adoption is inevitable. And so you basically arrive at a world where the majority of the world's value is on blockchains, regardless. I think if you have a presidential candidate that's optimistic towards crypto in the US, then the US market adopts crypto faster. But crypto and blockchains are a global technology. And I think that eventually the global competition by other countries using blockchains will force all other countries, including the United States, to adopt it as quickly as possible. So I think there will be a difference in how the US adopts crypto based on who the president is. But fundamentally, it's all really inevitable. And it's now being driven more and more by countries outside the US that are going to create a competitive dynamic that will force the US market to adopt blockchains even more. So I think there will be a significant impact, but I don't think it'll fundamentally change whether blockchains or cryptocurrency gets adopted in the next 5 years.
Switching gears, since you were last on the show in May, Chainlink has had a few developments, including the launch of proof of reserves for 21 shares Ethereum ETF. Now, this comes 5 months after 21 shares integrated Chainlink proof of reserves for its Bitcoin ETF in an effort to increase transparency. Walk me through how this partnership works and how it's going so far.
We are able to prove, using Chainlink's technology, that there is a certain asset backing a fund, and we're able to put that information on chain. And that gives more and more assurance to the people buying the real world asset, buying the fund. And so what you're actually going to be seeing is more and more data that results in better compliance, better transparency, better accountability, and eliminates eventually the need for those shadow books, because eventually the data through Chainlink is put on chain. It's similar to the transition you saw from like fax machines to email. There was a period where people were still using fax machines and they were still using email, but eventually everyone ditched fax machines and everyone is now on email. So we're kind of going towards a world where proof of reserves is going to become the normal way that you prove things about assets. And you might even get to a world where proof of reserves proves things about assets that aren't tokenized even. So the 21 shares work is kind of very interesting because it's about a traditional financial structure, but you're using on-chain technology to prove important key risk dimensions and what the status of the assets is in that traditional financial structure. So what you're seeing is the value of blockchain technology as a data transmission and reliability mechanism for something that is structured in a traditional way, as a more traditional financial product. And this is what you will continue to see more and more of, that the blockchain world and the traditional financial world will start merging, and blockchain technology's value will start being provided to that group. And I personally believe that you'll end up seeing more value in real world asset tokens than in cryptocurrencies.
So speaking about the ETF ecosystem more broadly, in June, VanEck filed an application for a spot Solana ETF, making it the first issuer to file for a fund that would invest in spot Solana in the US. 21 shares then followed suit. What's your reaction to that development, and what do you think would happen there? Do you think that those products will win approval as well? Because I've spoken with others in the industry, and they say that they're actually interested in a more robust financial infrastructure, allowing for traders to, hedge these products, to introduce leverage. Or is it more about what you just were speaking about a minute ago, this tokenization of real-world assets? Is that really where the emphasis in the industry is right now?
I think it's both. It's hard for me to tell which one will get more volume in the medium term. I think initially the ETF wrapper has such wide distribution and is so accepted as a reliable way to hold value that it will initially get more usage. But I think you will. I think it's actually two different things. I think what will happen is you'll have a community of more traditional institutional users that are comfortable with the ETF wrapper as a form of having value. I do think there will be many more ETFs because people want to diversify. And I know it seems funny to some people when we say diversify between Bitcoin and Ethereum and some other token, but there is actually some diversification there within the crypto space. So I think you will see a multitude of additional tokens in the ETF format because there's a big kind of ecosystem and a big distribution channel there. And then I think you will also see a lot of tokenization of real world assets, specifically tokenized funds. And then there will be a user group that continues to grow larger and larger. That is the user group that likes what we call on-chain finance. So they like to have assets on chain. They like to have proof about assets on chain. They like to have the NAV data, the AUM data, all of the relevant metrics of risk and success of an asset or a fund on chain, because they believe in the security, transparency, reliability, 24/7, 365 uptime, 24/7, 365 markets, properties of on-chain finance. And I think that eventually on-chain finance will become bigger than the traditionally wrapped asset world. When that will happen is difficult for me to say, but I am positive that it will happen eventually. It is inevitable because it is the superior format. And I spend a lot of time with everyone from central banks to the largest asset managers to the largest, private banks to various fintechs and many DeFi startups. Everyone, when you really abstract away the different vocabulary, agrees that this is the better format for more advanced financial products like funds. And so I think you're going to see more and more tokenized funds, and you're going to see a growing community of people that want to participate in on-chain finance, not as some kind of cryptocurrency related thing, but because the technology creates a better financial product. It creates a better fund. It creates a fund that you can redeem every 2 seconds instead of every 2 months. It creates a fund that you can know things about, not weekly, but second by second. It adds a lot of valuable properties to the transfer from I have ETFs in the traditional wrapper world, which doesn't have the market speeds or other properties, to this on-chain finance world. So that's kind of where I think we'll go in the medium to long term. But initially, I think the ETFs will continue to break into the public consciousness as a legitimizing force for cryptocurrencies, because it's kind of how people are used to interacting with things.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.